Inventory loss. A sole trader fixes her prices by adding 50% to the cost of all goods purchased. On 31 July 20X5, a fire destroyed a considerable part of the inventory and all inventory records. Her trading account for the year ended 31 July 20X5 included the following figures. Sales, $70,314. Opening inventory at cost, $45,900. Purchases, $62,300. Total, $108,200. Closing inventory at cost, minus $51,150. Minus $57,050. Gross profit, $13,264. Using this information, what inventory loss has occurred? Answer. Markup on cost, 50%. Markup equals sales minus cost divided by cost equals 50%. Sale equals cost plus cost times 50% equals 150% times cost. So cost equals sales divided by 150% equals $70,314 divided by 150% equals $46,876. Loss of inventory equals $57,050 minus $46,876 equals $10,174.